In open exchange now, we're looking at the indebted consumer, and here to shed light on that is Tendani Mantshimuli, who is consumer economist from Liberty. Morning, Tendani. Good to have you in the studio again. In fact, Sasha and I were just talking a moment about unsecured lending,
Yes.
and there seem to be two views on it. The one view is that there's too much of it, it's growing too fast. The other is that it's under control, that the responsible lenders are certainly being responsible, but it is an issue. Let's look at the consumer now broadly in South Africa. I think we do know that South African consumers don't save. It's the extent to which they're in debt.
Yes.
So what's the picture at the moment?
Well, the picture, as the Reserve Bank indicated in the latest quarterly bulletin, was that the level of indebtedness is increasing, which is not surprising considering where spending is. I mean, David, the retail numbers have been surprising on the upside for a while now. The general trend is downward, but I mean, you'll see some months where it just jumps high like it did in the latest data point, which was August. So clearly, because disposable income is not growing, since we know that the level of employments are not growing as much as we'd like them to be, we'll certainly see later today, I mean, at 10 o'clock this afternoon, this morning they're releasing the latest data, but I don't think we'll see a significant change in the numbers. Perhaps those who are employed can get more income with the higher than normal wage settlements, but certainly overall disposable income is not growing. So if there's growth in spending, certainly it's coming from debt, and that's what we saw in the last numbers that came out of the Reserve Bank. Whether or not unsecured lending is under control as moving towards a bubble, the fact that its overall indebtedness is increasing.
That's the issue, and I quoted earlier Lesetja Kganyago from the Reserve Bank saying that he doesn't believe unsecured lending is an issue. But I recall the mid-2000s when all the banks were trying very hard to lend you money, and I always told the story of, you get phoned, can we increase your overdraft? Can we increase your credit card limit? Would you like to take a loan?
You've been pre-approved by some lender to
and
give
I worked out that if I'd taken all these offers, I could have got about 250,000 Rand cash to spend. Of course, the question of paying it back is another matter.
But David, precisely the point that I wanted to make, I said the bank might feel that there is no cause for concern in the indebtedness that we're seeing. But the point is, should interest rates change direction and go up, which they might later in the year, not this year, I mean 2013, 2014, given where the inflation might move towards, are people going to be able to service their debt comfortably and still be able to get the boost in spending that the economy needs to go from where it is to increase significantly? So I think that's fine, but I think 76% is still quite high in terms of indebtedness.
And I remember in the mid-2000s it was in the 60s, and it was going up steadily, and people said, no, there's lots of room still for people to borrow. But I think consumers, like everyone else, you believe what you want to believe.
Yes.
And if we have a regime of low interest rates or static interest rate for so long, in the United States, they've actually promised them. I think till 2015, they've said there won't be any increase.
Exactly.
So you start believing it's going to be like this forever, and of course it won't be.
It's not going to be like that forever, David. And the other thing is that while we've seen the increase in disposable income, in South Africa, I think we can say with a certain degree of confidence that most of the income that people get goes towards spending. Maybe part of it was servicing debt, but we do not save. So what does that say about us relying on foreign saving to finance necessary capital expenditure in this economy? I mean, we have seen that despite what happened in the mining sector, which would have instilled fear in the hearts of some investors, we still could see some capital flowing into the country, primarily because there's still some yield, and elsewhere in the world they won't get the same yield that they get in South Africa. But should that go away, are we still going to attract the same investor confidence that we do have currently? Earlier on, you were talking about the deficit in the current account balance. We need to have enough coming in to finance that deficit, or alternatively, you need to find domestic funding for some of the projects you're looking at, and that comes from saving. So if we continue to see the culture of people using all their disposable income on expenditure and financing part of their expenditure from debt, you're not going to see the saving that, I mean, it's an objective in the National Development Plan. You want to get South Africans saving. So if we continue at the rate we are going right now, we're not going to see that saving coming from within the economy. We're going to rely on foreign saving to finance what we need here, and I don't think that is sustainable in the long run.
Of course, with low interest rates, the bank's interest on savings is lower than it is in a high interest rate environment. Are the banks behaving as as they should, because again, looking back to the mid-2000s, one sense they were looking at market share
Yes.
more than anything else.
Yes, I don't think, I think that they're still looking for market share right now, but in terms of encouraging people to save, I don't think we can put the blame squarely on the banking sector, because it's also upon the consumer to say, don't feel that because interest rates are low, yours is just go out there and spend on, or spend on your disposable income also, as well as incumbent on us as well to look at other ways of financing our students, or actually delaying gratification, instant gratification, and postponing it for later. I'm also thinking that I think most South Africans might not have enough to retire on later on because we don't save currently.
Also, the talk about people paying for their groceries out of debt.
Yes.
You know, they're actually borrowing to keep up.
Yes.
This can't go on. When does it end? When does this growth stop? Is there a wall that we're going to hit, and when in the next year or two is that wall?
So David, last time when we reached 82% of GDP in terms of, of disposable income in terms of household debt, I think that wall was quite abrupt in the way we reached it, because interest rates rose and rose and rose. People started defaulting. The banks themselves, even without the introduction of the National Credit Act, started cutting back on lending indiscriminately, because they could see that the level of people defaulting on the debts was increasing. So I think that's where the wall will come up. I don't think we're quite at the same point we were back in 2006 and 2007.
3 months, 6 months, a year?
No, not 3 months, 6 months. And I do think that perhaps by this time next year we'll be talking about something else. But in the next month or so, certainly not when Christmas is coming, people are still going to get credit to finance that expenditure that's coming up in December.
And presumably those retail stocks that everyone says are overpriced are just going to keep going, particularly the ones who are better at it.